Hello everyone, welcome to the Elliott Wave YouTube channel. This is Henry. Today is Tuesday, January 5th. The time is 4 a.m. GMT. First of all, Happy New Year to all of you. So today is the first chart of the day for the new year. And we're going to be looking at the Russell futures. This is a 60-minute chart. We can see that the index is currently doing a wave 4 pullback, and the structure of the pullback looks to me like a double zigzag or double three, in which we have a zigzag here, and then we will have another zigzag here to complete this complex correction called double zigzag, right? So this blue box here is expected to end this entire correction, and then from here we can see buyers for more upside, or at least a three-ways bounce reaction from this blue box. Now I think what's interesting in this structure right here is the idea that if you look at this is obviously the biggest swing from the peak, right? So this is in our term, we call this a connector, right? We call this a connector from the peak, something like this, as it is the biggest swing, and also obviously it breaks the channel. Like this is a cycle, and then this is another cycle. Now you see in the first leg here, the first cycle that ended, this one looks to me like a clear three-ways reaction, a three-ways move. It doesn't look like a five waves to me. It doesn't look like an impulse. So what this is telling us then is, if this is a three waves, if your first leg, if your first cycle is a three waves, then most likely this is not going to become an impulsive structure and then go down very impulsively, because the first leg is only a three waves. Three waves is a corrective pattern, and then it ended here at the 100%, which again is another evidence to suggest that this is only a correction, right? So if you know that this is only a correction, then most likely this is still within a complex corrective pattern, and this area most likely will see some sort of support. Now from here, either we go to new high, or we can at least get a three-ways reaction higher from this area. Okay, now let's zoom out a little bit and take a look at the larger degree. If I look at the daily chart, now remember this is 3 and this is 4. So if you look at here, this is the 3 here, we're ending the 4. Now look at this daily chart. Now you can see clearly here there is extension right here. This looks impulsive and it looks extended. That is typical of a wave 3 when you see extension like that, right? So then that means if this is a 3 and 4, this has to be a 1 and 2. So we are talking about the cycle that started from September 25th, right, in the Russell. So over here it looks to be incomplete 5 waves. Now you might say, well, how about this is 3 here, 4 here? Well, I guess if you want to force it that way, probably, but it looks to me that this is a little bit too shallow to be distribution wise compared to this one. It looks to me this leg still is within the same cycle from here. So, and also the other idea that this pullback still remains corrective so far. So what that means is most likely we can still see for the upside to finish a 5 ways up from the September 25th. And again, if this is really going to be wave 4, you can double check with the retracement principle. If you measure the retracement of the wave 3, typically wave 4 should be somewhere between 23.6, 38.2. This is a guide. It's not like a rule and it must be no, it's only a guide, typically somewhere around this area. Sometimes it can even go to 50, right? The rule of course cannot overlap with 1, but that's kind of like the only rule. Otherwise, as a guide, then it should be somewhere between 23.6, 38.2, and ideally it's also a guide, should not go below 50%, because then it will be getting a little bit too big even if it doesn't overlap. But if it is going to 50%, that starts to get too big for a wave 4. All right, so then you can see that this WXY extreme area 1911 also has an overlap, a nice overlap with the 23.638.2, suggesting that we got a pretty much good confluence in terms of expectation, and likely then the direction still remains to the upside, and despite the sell-off you see in the first day of the new year, is still going to be to the upside eventually as the right side of the market. Okay, so as always, if you want to get regular updates and also analysis and trading ideas and so on, please you can feel free to join our service. We have 14 days free trial, and the link is provided in the description of the video. So I'll see you all again next time. Have a nice day to you all.